Alright, what's going on, guys? Just gonna do a brief overview of today. So, basically, just to get straight to the point and get it out there. Thursday and Friday, I'm bullish, higher. Firstly, looking at these relative equal highs here. Okay, and I say I'm bullish, but that's only if we hold this intermediate term low here and this intermediate term low here. So, if this holds this low, then I'm bullish Thursday and I'm bullish Friday, gravitating towards all-time highs once more. Okay, so plain and simple. As we can see here, we have midnight opening price. We trade below that. Sell stops are triggered. Let's flip to NASDAQ. So if we go down to that 15-minute time frame, as stated in stream, we came down into an optimal trade entry, 79% retracement. Okay, optimal trade entry. We had a 3 drives pattern lower, continuously taking sell side. So this intermittent term low was to stay intact because there's no need for us to trade below it when sell side has been taking 3 consecutive drives. Okay. Next, we have this last down close candle right here. It's a 15-minute order block. Okay, we shift above that, and that'd be our change in state of delivery. What's it gonna want to attack? Buy stops, and this would be the Asian session buy side liquidity. Okay, so as soon as we had this large range run down, came up, made this high in the Asian session. So this would be a session-based liquidity pool. We trade off, and everyone's dogpiling their stops up there, and we all see the aftermath. Okay, so let's drop down to the 5-minute time frame. As we can see, we come up, have a market structure shift above this swing eye here, and if we take this little rectangle here, we see that we drop back down into a 5-minute inefficiency. And what else? This right here is a 5-minute bullish order block within the 15-minute. Okay, and whenever you have an imbalance like this within that 15-minute order block, that's very high probability. Now, why did we not take this trade earlier in the stream? Rules are rules. We would be trading prior to the 10 o'clock red folder news release. Okay, so we kind of had to let that go, all the excitement wear down, and it really didn't leave room for any other setups after that until we reached this macro here. There's one little short you could have taken here, and I'm going to briefly overview that. I just didn't deem it as important enough to push for the real count. Okay, and then obviously we saw what happened on stream here. Took a $400 loss, trying to long up into the buy side, and new week opening gap up here, and entered a seek and destroy like consolidation, and right in the final hour we dump. Okay, so if we take a look here, I'm going to go back up to the hourly charts real briefly. I'm not going to map it out, but we can see that we traded up into a premium hourly imbalance here. Okay, if we take our fib, high to low, up into that 79% retracement, we had a large imbalance left behind that we had yet to work in. We go to the 15-minute time frame, or sorry, the 5-minute time frame. We create this intermittent term high here, so we have a swing high here, swing high to the left, swing high to the right. And what's below here? Short-term sell-side liquidity. Okay, right there. 1-minute time frame. Okay, off that intermittent term high, we have a displacement, breakaway gap. Okay, we create this up close candle, trade back up into the up close candle. That was the only opportunity to get short right here. This right here, we're tracing back up into that up close candle. Boom. That was the only opportunity left to short. Okay, and just so happens this was the market classically utilizing that 1150 to 1210 macro, aka the lunch macro. Okay, so right here, see this section of time, and then you're just simply targeting the sell side and the imbalance down here. Okay, and then coming into here, we had, okay, sell side taken, imbalance priced in, we had that displacement. Okay, I got long here, was about almost $400 in profit here, and it just simply fell short of the buy side up here. Okay, And you know, it is what it is, guys. $400 in profit, and then came the whole way back down for the stop loss, which resided below this bullish order block. So I guess, as I was stating prior to taking this trade, you know, this is just the risk that comes with trading around that Powell speech. Obviously, I waited for the speech firstly, and then I tried to execute. And then we had that this right here is classic manual intervention. Okay, it's like that hand just coming into the marketplace, and you know they're controlling it, and that's when you step back and say, okay, this is okay, this is their. I'm not gonna try to arm wrestle them. I'm done. And then we see the aftermath of that right here. We just dump lower. Okay, so I'm going to touch a little bit more on my bullish bias here. So if we go to the daily time frame, we take the executions off. If we go to the daily time frame, okay, we can see that we traded down into this bullish order block. Right here. Okay, and if we take our fib relative to our short-term daily range here, we see that we traded down into 62% retracement level. That'd be our optimal trade entry level. Okay, and then just with what we're seeing here in price, okay, we're closing above the low end of this inefficiency here. We're creating a swing low, and these highs just look a little too clean. And once again, the same exact thing happens every single time. People are so excited to try and pick the top, and their buy stops get dogpiled up there, and we're all going to see the aftermath. So let's go down. Let's go back down to the hourly time frame just to show you a few more things. So obviously we've priced in this entire buy side imbalance, sell side inefficiency right here. So that would just be this candle's low right here. This candle's high. That entire range there, we worked in relatively the entire range. So let's take that off. We don't need it. And notice how the body is still within this 15-minute inversion gap right here. Okay, just take note of that. Now, what else did we trade down into? Take this body, extend that out. What is this? This is the hourly bullish order block. What do we do at bullish order blocks? We trade down into them to accumulate long positions to the upside. What are we going to be targeting? Number one, new week opening gap right here. Number two, the relative equal highs. Number three, this deep premium buy side liquidity pool. Okay. And then everything I said with NASDAQ, just go ahead and apply that to ES right now. Okay. So like I said, bias is bullish Thursday and Friday. Hold me to it to the end of the market close, unless we lose this intermittent term low. Okay, plain and simple. I'll see you guys in tomorrow's stream. So now that we're finally getting that retracement, I'm going to be able to frame some type of long above for this. Okay, I'm going to look to counter this, and my target will be right here at the new week opening gap. Alright, so I'll go ahead and long it there. Stop goes below the order block, and then sell limit is going to the buy side. Now in this scenario, this would be the time where you'd start looking to try your stop up a little bit, but I can't do that within this trade because there's a likelihood for us to retrace. Or I'd have to allow it to retrace below the short-term low. Let's check on ES. Okay, a little bit closer to the buy side there. Honestly, I would, as soon as ES buy side is cleared, I would close out on NASDAQ as well. I wouldn't try to play with that. You know, because then you enter potential SMT territory, whatnot. It's better just to, you know, take the guaranteed profits rather than trying to be greedy for an extra couple dollars. of there. I'm monitoring that on my other chart right now, just watching that and ready to close this position if ES does take that buy side. Alright, so there's the end of that transaction there. You guys see the aftermath of that? Looks like it just fell very shy of that buy side there, so